What's up, YouTube? It's Kenny again. I wanted to make a little bit of a different type of video today. I want to talk to you about how I do things, talk to you about my strategies, how I'm able to trade tax-free, and just in general kind of let you know how I do things and maybe help you on your journey if you're new to this. First of all, I'm not a financial advisor, and you better be glad I'm not, because if I were, I would not be giving you some of the information that I'm going to give you in this video, all right? I'm just a truck driver driving across the country trading and researching stocks, and I will not be held responsible for anything you do in the stock market. I am not your mama. Hit that subscribe button, mash on it, help me grow the channel, like the video, and let me know what you think about the information that I'm putting out in this video. So, when I say be glad I'm not a financial advisor, I do a lot of my trading inside of a Roth IRA, and that allows me to trade tax-free. There are no short-term or long-term capital gains tax in a Roth IRA. That means if I make $1 million in that Roth IRA, I will get $1 million. There are no taxes ever. Now here's the thing. You can't touch the gains until you retire, okay? But you can always take your money back out tax-free, penalty-free. You just can't touch the gains until you retire. So my strategy will work for you to trade tax-free if you're trying to build wealth for your future and not trying to make money so that you can go on a vacation next year or make money so that you can go buy a motorcycle next month, okay? I do also have a cash account, but I hold the things that I put in there long term so I don't have to pay taxes on it. If you do not sell a stock, you do not owe taxes on that stock, okay? But in the Roth IRA, that's where I do most of my moves. I'm building wealth for my retirement, for my future, and by doing it this way, I don't have to worry about holding a stock for a year to avoid short-term capital gains tax. I don't have to do any of that because there are no taxes in it, okay? A financial advisor will not tell you this. When I first started, I looked everywhere. Can you trade in a Roth IRA? Can you trade in a Roth IRA? And everybody said, well, you can, but we don't recommend that, and mutual funds and index funds, and they want you to do it slow. They want you to put it in there and get them 5, 6, 7, 8% a year, okay? But I've gotten 70+% this year, okay? Why would I want to get 5, 6, 7%, okay? Is it riskier? Sure, but if you're a smart person, do your research, you don't invest in junk, you can do what I've done, okay? A Roth IRA is not the same thing as a regular IRA. You have to specifically start a Roth IRA. Now, the reason that you're able to trade in there tax-free, the government allows you to do that because you are paying your taxes up front. You're paying your taxes when you get paid on your paycheck. In other words, a Roth IRA, you know, it's post-tax. It's not pre-tax like a 401k. The advantage over a 401k is that in a 401k, you don't get to choose what you invest in. Your company chooses. Someone from your company goes in and they decide what mutual funds you're allowed to invest in, okay? In a Roth IRA, you can buy and sell anything you want almost. There are a few restrictions on stuff like triple leverage funds, and you know, there are some restrictions, okay? But for the most part, you can buy and sell whatever you want. And if you go to the right broker, like Fidelity and some of these others, you can buy OTC stocks and stuff that you cannot get on Webull and Robinhood and stuff like that. So you want a big boy account. You don't want a little kid account in Webull or something. You know, you want for your Roth IRA, if you're going to do a lot of trading in it, you want to have a big boy account, okay? One of the big ones, Fidelity, TD Ameritrade, you know, a real stock, a real account, okay? I don't mean to bad talk Webull. My other account is on Webull, but I just prefer Fidelity. It's better. So my strategy, okay, is to max out the Roth IRA every year. The maximum you can put in a Roth IRA if you are under 50 is $6,000, at least right now. That could change. If you're over 50, you can put $7,000 in, okay? Last year I maxed it out at $6,000, and that was over, I've only been trading for about 7 months, guys. So I maxed out my Roth, and then I've put $250 in there so far for 2021 for this year. Now, here's a trick. If you have more than that to put into your Roth IRA, if you start one right now at the beginning of the year, it will allow you to put money in there from last year. So say you have $12,000, you can put $6,000 in for last year and then put your $6,000 in for this year up to a certain point. And it goes at least 3, 4, 5 months, they'll let you put it in for the last year. So that's just a little trick, little tip there, pro tip. So as far as my trading strategy is concerned, okay, first of all, just to reiterate, if you trade in a Roth IRA, it is tax-free, and it is like a savings account. So if I've put $6,000 in there, and I've turned it into $11,500 at this point. If I want to, I can take my $6,000 back out. I'd hit a few buttons, it'll be in my bank account in a couple days, okay? No taxes, no penalties, no nothing. If you build it up real far and you decide you want to pull it out early before you retire, you can do that, but you will have to pay taxes and penalties on it, okay? Just like if you were to drain a 401k. So with that said, getting that out of the way, that's how I do things. I have a cash account that I only buy things in there that I intend to hold long term. I do not buy things that I consider risky in there. And then in my Roth IRA, I do all my trading. Now see, that's backwards from what a financial advisor will tell you to do. They will tell you, if you want to trade some stuff, go start a Webull or something, but in your Roth IRA, you need to be going into index funds and stuff like that, okay? No, not in my opinion, okay? I don't want 5 or 7% tax-free. I want all of my stuff that I'm moving every day to be tax-free. And then my long term, I can sit that in there and eventually pull it out whenever I'm ready. The thing about the thing that they try to get you on, okay? People think that the 401k is the way to go because you get the match through your job and all that, okay? And because people think that because it comes out before taxes, they're saving themselves money by not paying taxes on that money right now. What they don't get is they're going to have to pay taxes on it when they withdraw it, when they retire, okay? So if you make $1 million in there, just say you make $100,000 in there, and you got to pay 20% taxes on it when you retire, you're only getting $80,000. If you make $100,000 in a Roth, you get $100,000. And see, the idea is that the financial advisors will peddle to you is that, well, when you retire, theoretically you should be in a lower tax bracket and therefore pay less taxes on it doing it that way, okay? That assumes that the taxes don't go way up by the time you retire. Do you think the taxes are going to be lower when you retire than they are today? Highly unlikely, guys. Highly unlikely, okay? So there's a lot of trust being placed in the government or whatever. But the government, they would rather have their money now than in 20 years or whatever. So they give you this break of using this Roth IRA. Now, a lot of us regular people, okay, $6,000 is 10% or more of our yearly income. So most people are not putting 10% into their 401k. So it's not like you're able to put so much more money. You are technically able to put more money in a 401k every year, But the point is that this is for regular people. This is not for people making $200,000 a year. If you put 10% of your income in there at 60 grand a year, which is, kind of close to what I make, that's about the amount you can put in a Roth IRA. So a financial advisor will tell you to max out a Roth IRA, but they want you putting it in index funds and shit like that. They will tell you to take the free money in your 401k. I do that. I do my 401k just enough to get the money that the company matches me. And then the rest of it goes in the Roth IRA. And any surplus over that goes into the cash account, long-term cash account, okay? That's, in my opinion, the way to go. Okay, so my strategy as far as, sorry, I know I'm rambling, guys. My strategy as far as actual trading goes, okay? Since I'm doing it in a Roth IRA, I don't have to worry about the capital gains tax. So when you're doing it in a cash account, you're like, well, I'm going to have to pay 25% or whatever it is, plus state taxes and everything on the money if I bail out of this stock in less than a year, okay, with profits. And it's an incentive to not build your money, in my opinion. Now, if you're a long-term investor, maybe that's a different story, and you like holding stuff for more than a year. But my strategy is to stair-step my account, and it's worked really well for me so far. I find the hot stocks, I wait for a dip, I buy in. When it goes up, I sell it. I may only make $50. I may make $200. I may make $500. But when it goes up and I'm comfortable with those profits, I sell it and I lock those profits in. And because I do it in a Roth IRA, I don't have to shave off of that for taxes, okay? So when I make a gain, I keep that whole gain. And that's how I've done it. I do lots of research. I try to swing trade stocks that have been in a longer term uptrend, so that I feel like that even if something was to happen and it was to go down, I could hold it and it would eventually come back up. So that's the way I like to do it. Now, that's not to say that I don't have losses. I do. I have lost. When I first started, I lost quite a bit in those penny stocks, and I'm surprised that I've made it up and gotten so far since. Stay away from the penny stocks. But by stair-stepping like that, and sometimes I sell for a loss. Sometimes I'll go down, but I watch it closely and I don't let it go down more than 10-15%. So that when I do sell for a loss and cut my losses, it doesn't have a huge impact. Now, if you sit around and wait and fall in love with the stocks and wait and it's going to come back up, and then you just get so far in the hole, then you're going to fuck yourself. But if you don't fall in love with the stocks and you cut your losses and move on to something else, every time you see that green and you feel that you're at a good spot, you sell it, you're going to keep your account moving upwards in an upwards trend. Stair-stepping it. $20 at a time, $50 at a time, $500 at a time. Whatever you can get. Green is green. Profits are profits. You should be locking in profits if it's not going to kill you on the taxes, okay? That's why I like this strategy, because the taxes are irrelevant if you do it this way, okay? Now, like I said, you're not going to buy a boat with it next year. You're going to have to wait till you retire. But you can put things long-term holds. Like I put long-term stuff in my Webull, and I don't even really look at it because I'm having my fun in the Roth IRA with my trading and stuff. Because that's what it is. A lot of us, we like to make moves. We like to make moves. And when you do that in a cash account, you're just taxes, okay? But when you satiate that urge to make all those moves inside of a Roth IRA, there are no taxes. So you make all your moves inside the Roth IRA, and then you get to play and feel good about yourself and everything, and you just put little bits away, socking it away in the long-term account, and because you're so busy with this other one, you forget about that one, and you don't even look at it. You look at it every once in a while, but you're not so motivated to make all these moves because you've got that you're making those in somewhere else. That's my strategy, guys. That's what I do. How do I find the stocks? There are lots of ways I find the stocks. Probably the main way is YouTube. I am subscribed to a whole lot of YouTube channels, okay? And I watch them religiously. I wake up in the morning, drink my coffee, do my YouTube videos, and then as I'm watching them, I'll pause the video, go look at the chart. I like to look at the 1 year and the 6 month, look at the chart, see what the stock's been doing. Look at, if I'm interested in it, I'll find more YouTube videos that go more in depth into the company and stuff like that. I also look at the companies on Google. I go look at the company's webpage. And then when I find ones that I want to watch, I put them in my watch list. Okay, I have a Webull watch list. That's what I use for my charting. I pay like a couple dollars a month to get the live charting, and that's where I run my watch list. So when I find these stocks that interest me, I put them in that watch list. I do not buy the stocks right away most of the time, okay? I put them in there, and I'm constantly looking at my watch list. I'm getting a feel for these stocks over a longer period of time, a week to a month, 2 months. Sometimes some things have been in there for months and I haven't bought them. But it's because I'm paying attention to how they behave. I'm looking at where the price ranges are, so that if there's a big dip and I see the news, there's not a news story or anything, it's just something, for some reason there's a dip, or there's a news story that I see is not anything real bad and it dips real far, I pounce on it. And that's what you have to do, guys. You can't, I do it. I screwed up just the other day and bought one too high, two actually. But you have to try to discipline yourself to wait, and you see it's trading in this range, right? It's trading in this range, and then one day, boom, it drops way down. You can buy it right there. And then if it's a good stock, you know, you've already determined this theoretically, then it's going to eventually come back up to that and trade like that. And then when it trades like that, you find the up part and you sell it and you just made a profit. Maybe only $20, maybe $50. If you bought enough shares, maybe $1,000. But the point is to get the little green steps, and keep on moving and keep on moving and keep on getting it higher and higher and higher. And eventually, it doesn't take very long to get to a good place, guys. I mean, and it's really, like, to those of you who are new, it's really interesting that you start with a little bit of money, so the gains are really small, $10, $20, you know, $5 here and there. But as the main number, as the whole of the account gets bigger and bigger, it feels like you hit these levels, like, you know, well, now my account's at 1,000, so I can buy more shares. Now my account's at 4,000, so I can buy more shares and more expensive stocks. And as the account levels up, I would call it, the profits get bigger, the numbers get bigger. It's exponential. So when you have $10,000 in your account, instead of making $50 a day, $100 a day, you're making $400, $500, $600 a day. You know, it's amazing. It's addicting, and I just wanted to share this with you. I wanted to share with you like how I do things. I also use Seeking Alpha. I don't pay for it, but I get alerts for the news stories. I look through the news stories and find stocks that way. There's lots of ways to find stocks, okay? What I like to look for in a stock is a stock that's been in a longer term uptrend, okay? Take Enphase, for example, ticker symbol ENPH, okay? It's been uptrending for over a year. If you look at the 1 year chart, you'll see it's just up and up and up and up and up. And there are downs and ups in there. Now, I don't swing trade it. I've been holding it for a few months now. But that is just an example. You want to find a stock that has an uptrend, okay? And because it has an uptrend, you can be relatively certain that if you get in it and it has a dip or correction, it's going to continue to trend upward, and you will eventually be able to get out of it without selling in the red. But then within that uptrend, you know, it's going to be going up and down and up and down and up and down throughout there. So you wait for a correction or a dip and you buy in, and then you ride it up to that next level and sell it. That's the way I do it. Okay, now I don't always do that. You know, there are things like OEG that I'm in right now that I've done really well, that I bought based on a hype play. But it wasn't only based on a hype play. When I looked at the company, I saw long-term potential in it. So it's kind of a similar strategy, that I did buy it based on hype, but I looked into the company and I really did see something in the company that made me think that this was going to uptrend. So it's kind of the same strategy, but it is safer to do it the first way I talked about. To find one that's been in a long-term uptrend and swing trade that. Because then if you get stuck in it, you know that even if you have to hold it for a year, it's going to eventually come back up and you'll be able to get out of it. Volatile stocks, risky stocks like CCIV, where it doesn't even have a merger target and it's all rumors and stuff. Penny stocks. These are the types of things that will get you beat the fuck up. They will take your money and drain your account. Okay, so you have to have a balance between a stock that moves, that's somewhat volatile, it moves, but at the same time, it's not going to just have the bottom fall out of it. You have to do the research and you have to pay attention to that, okay? I don't know. I guess I'm going to end this here. Let me know what you think about my strategy, guys, in the comments below. It's been working out really well for me. It may not always continue to work out well for me, but I'm going to continue to ride it all the way until it doesn't. And again, I'm not a financial advisor, so I'm not going to be responsible for you. Not everybody is created equal, okay? You might think they are, but they ain't, you know. Some people will excel at this, some will not. Depends on the amount of work and dedication you're able and willing to put into it, okay? If you're not willing to watch it, you're not willing to research and learn, then you're better off in index funds and ETFs and stuff like that, okay? But if you are the type of person who's intelligent and who's able to spend a little time on it, learn how to do it, take your time and buy in the right spots, then you can make money like this too, okay? I hope you enjoyed the video. Subscribe, guys. I'm still trying to build this channel. So hit that subscribe button, like the video, and again, let me know what you think of my strategy in the comments. Thanks for watching.